I think we're setting up for one of the biggest pumps in history. Now, I've been in the markets for 18 years, started with property, then into stocks and commodities, and then found my way into Bitcoin and cryptos in 2017. And this is the biggest pump in history. And I think we're going for something even bigger. I want to show you what that looks like in the charts. So I want to give you the objective data that you can take away for yourself and also dive into some of the subjectivity, because at the end of the day, that's what makes us our own individual investors. You got to find something that is your edge in the market. And whether you believe it or not, entirely up to you. You can take it away or delete it, whatever you want. Hit the like button, subscribe to the channel if you're new here. Each of the day's analysis builds upon the previous day. Now, before we dive into the agenda and the discussion along with the data, this is your home of macro cycle analysis. It's me, Jason Pizzino. As I said, we're going to cover Bitcoin, cryptos, the stock markets, little on the commodities, and of course, the real estate cycle. Here is today's agenda. As I said, biggest pump in history. Now, this has already begun, but I think there's further to go. We can quantify this with the amount of money coming in. So that is the biggest pump. However, I also get triggered when I hear that from people saying this is going to be the biggest pump ever. But I want to show you how that develops. And at least in my own opinion, let's call it my own humble opinion, how this is doomed to repeat. Big upside, then also really big downside. Plenty more on the agenda to get through. Of course, it's Black Friday. I'll talk about that later in the video. But let me just start with the obvious, and then I'll get into the not so obvious. The obvious, at least to me, maybe you see it as well, is the market caps themselves. Bitcoin started at around 300 billion at the bottom of this cycle, currently now at 1.9 trillion. So you subtract the bottom from where we currently are, it's 1.6 trillion. And the previous peak for Bitcoin was 1.2. So even if you don't use the range of the previous cycle from that low of around, 50, 60 billion up to 1.22 trillion, if you just don't even use that range, the current move itself has been the largest pump in history that we've seen so far. But I think we've got further to go. And if we're taking a look at the total cryptocurrency market cap, it's at 3.32 trillion. So this includes everything. I'm just taking it off coin market cap. So everyone has this data as opposed to my own indicators and signals that I use to show the total cryptocurrency market cap. 3.3 trillion. The bottom of the cycle around November and December was about 800 billion. So in terms of the overall pump, we're still a few hundred billion short, but I dare say we'll get to that. It's only 10% move for the entire cryptocurrency market cap over any point throughout this cycle. And I think the overall cycle, stock markets, Bitcoin, real estate have also got a lot further to go. So that's the obvious. Let's keep going through the data that has been presented to us over the last couple of months and also the end of last year. That's because I want to reflect on where we've come from. Is this data interesting? Is it useful? Can we apply it moving forward? That's what I'm always interested in. A lot of people just want to hear new stuff. What's happening new? Well, the old is the new. If you can use something and it works and it gives you a bit of a roadmap as to what's coming next, I think that's the best value you're ever going to get. So this one here was a month ago now, and this is looking at bull markets. Once a bull market gets to 2 years old, there could be a lot more. So this is just pulling the data from the last 50 odd years. I think this goes down to the 80s. You can see from October here, you got the August pump, so October 74, so yeah, basically 50 years to 1980, and then so on and so forth. Basically, all it's showing you here at the bottom are the number of years, and each of the colors shows how far the bull market has gone. The biggest one there is the dark blue, and that's from 1987 to 2000. Now, in terms of our real estate cycle, we count that slightly differently. That's an important point to note. Nonetheless, you still have very long bull markets overall. So this one's just showing you that basically once it gets to 2 years, there is a lot further potential that it's got further to go, and it could be multiple years after that. Now, on the shorter term scale, you've got the S&P 500. Essentially, the point of this is that you still need to see a lot more money coming into the markets in order for Bitcoin and cryptos to pump. Because, well, at least from my own analysis, the way I see it is it's a risk asset. Some people don't see it that way. That's okay. Whatever gets you profits, keep implementing that. S&P 500 composite for 2024. This came out in October, so a month ago. How's it gone since then? Well, we did see the move up in early November. This one might be late October, but essentially it's around a similar period. At the end of the day, these are roadmaps. You're not trying to get an exact replica of the previous years. This is 70 years of data. You just need a roadmap. Where are we kind of going? Are we on the right direction? Are we tracking towards similar endpoints? I'd say we are. So we've had the pump up. Now we're going a little bit choppy, okay? And then probably sometime in December, we start to go up again in a cleaner fashion, and that ends the year in a positive. So that's happened pretty much each election year that the data is here for. So that then leads into 2025. Is 2025 going to be a good year? Well, of course, this was the longer term look. Yep. Seems like we're on track. We've been tracking 2024 relatively well. So let's have a look at the presidential cycle. We've gone through 2023. We had the weak period. There was the peak in July down into October, and then basically the market rallied from there. Everyone in 2023 was calling for a recession. We weren't. I'm sure that you guys were watching saw that yourselves. A lot of recession calls in March and throughout 2023. Then they pushed it across to 2024, saying that we're going to get a recession. Didn't happen. And now they're pushing it across to 2025. I think those calls are going to get dried up a little bit, and that's where we start to go a little bit crazy for a period of time when everyone is right. That's the winner's curse phase of the cycle. Everyone is bullish and everyone's making money, or at least if you're in the markets. Otherwise, things are a little bit tough. But anyway, looking at the presidential cycle here, this is your 2023. We saw the correction, then the market finished up. 2024, it's been a stronger year, but we've had a similar-ish pattern. We had the pullback in April, we had the pullback in August, and we've seen some minor corrections in the second half or the quarter four so far in 2024. So nonetheless, it was open to close is basically an up year as well. So we go through into 2025 being the post-election year. First quarter can be a little bit tricky. So keep that in mind for quarter one of 2025. There's a lot of data coming up about the inauguration and then the pullbacks around that period. I don't think this time is going to be different. It might be, similar, and it might be a bit hard to see how that's coming through. But overall, I think we're going to see something similar within the first quarter, maybe even into the second quarter of 2025. And then you might get slightly clearer runs. But we've got a little way to go until we get there. So cycles are essentially roadmaps. And the roadmap has led us on the right path. At least that's the way I'm seeing it. The right path to me is being on the right side of the market and making money from the market. Obviously, if it's going up, you want to be in the market. You don't want to be scared out of the market because someone's telling us that, oh, that crash is coming up, that recession is coming up, you better get out of the market. I don't think that's the right call. Now, here's another look at the market and how ridiculous things can get. This is a picture of 1800 up to 1980s. So 100 years here. Incredible. Okay, so this is the 12-month chart. We could be somewhere like this. And I point to that bar because when you look at it here, you got a green, you got a correction, you got another green, 2023. This could be 2024. So let me just fast forward to where we are so you can see that on the chart. There it is, green, red, green, and we've got a big year up. So far 25%. Last year was 24%. You had the correction year of 22 at 19%, and before that was 26, and it was basically just a nice big move to the upside. Now, if I just go back to this point here where we were in the 1980s into 1990s, you can see that this still looks stupid. It just looks so crazy to be up that much. But things got crazier in 1995. They got crazier again, 96, 97, 98, 99, and there's 2000. So things can go even more ridiculous. I'm not saying they have to, but just keep in mind that they can go further up, even though you're seeing a lot of recession calls. And remember, 1990, that was a recession year. That was big time recession, 1990, 1991, and then the market kept going up from there. So the next few years, that was a 33% move, then a 20% move, then a 31% move, then a 26% move, and then a 19% move. It was like 5 years in a row of double digits, like multi-double digits there, 20 and 30% moves to the upside. Yes, you got smashed afterwards, 50% correction. So I'm not saying it's going to be easy, but that's why I've got here biggest pump in history, but then the cycle is doomed. I mean, upside is great, but the doom comes afterwards. All right. So I think we could be in for something like that. Let's just keep following how the monthly swing chart is progressing from there. Now, I'm not looking for any, this time is different. I'm just looking for rhymes. And if that begins to rhyme, then I'm just going to keep running with the rhyme that the market is showing us. It's not the first time that that's happened. You can just sort of zoom in to any other period in history. Big booms in the 1920s. We've all heard about that one. And then, of course, major correction, major collapse, really, Great Depression through here. Then you had another big move to the upside through the 1950s because of how long the market stayed down for. It was a massive correction from that point. And then you continued up, well, the market continued up. And then, of course, the 1960s and 70s happened. So I'm often met with, well, this time is different. You know, we got Trump in, or we have AI now, or something else is different. That's the point of the market. It is going to be different, but it rhymes. That's why you get a this time isn't different, but it rhymes. For those of you playing at home, here we are. We are moving within the winner's curse phase. This is a 7-year period. The circle is going to change maybe every month or every quarter as we lead up into the peaks. The peak looking somewhere around 25, 26 for house prices and the economy. The stock market, maybe we keep on going like we've seen with the roadmaps here, and then also in the previous years as well, where this basically just went parabolic and then had to have a slowdown. So depending on how far the markets run up during this winner's curse phase is going to depend, well, it's going to, I guess, determine the correction or the collapse or the major recession. Basically, how long does that last? If this happens at a slower rate, then I think the other side of it might not be as severe, but I guess you'll never know because you won't know what it would be like if we ran straight up. Would we come straight down? But nonetheless, look, I still think we have a lot further to go on the upside to make the profits. There's time in the cycle left before this period happens. Now, if you're struggling to make a plan, put things together, check out the TIA Premium Black Friday sale. Our Black Friday sale is the biggest sale of the year. So if you've been on the fence and you're still considering whether you jump on board and ride out the last years of the cycle, whether that's up or down, get yourself set up with your investment plans for this period. Now is the perfect opportunity. Lots of courses to get through. There's a premium community that you can also chat with to develop your plans and chat to other people around the world with what they are doing. So I highly suggest checking that out while the Black Friday special is on. Now, the biggest pump in history is on, and I think there's still further to go. That's the obvious part. I'll give you something that's not so obvious, but I'm going to leave that for now. I want to get into Bitcoin and altcoins before we start to dive a little bit more into how and why I think these things happen, at least based on what I've learned from history. So it gets into a little bit more of the subjectivity, but hopefully if you enjoy studying human psychology, you can see how this thing tends to repeat. But before that, I'm looking at all these words up here, in particular Bitcoin and cryptos have done relatively well over the last 30 days. But you can see it's just starting to drop off here. Obviously, we've got Thanksgiving, so happy Thanksgiving to the folks in the US or anyone else that is around the globe celebrating Thanksgiving. So that's a probable reason why you're seeing the search volume drop off. Not as many people online over these 1 to 2 days, but we still haven't got back to this level here of around 21, 22, 23. If I extend this out to 90 days, you can see that these were the recent peaks and potentially going to form some sort of higher low. I'd only be concerned if we started to break down from this level here. This was all through September and October when Bitcoin was down between sort of 50 and 60K. Less people looking for or searching the term Bitcoin and cryptos. Next up is the Fear and Greed Index, still 78. It jumped up a touch from yesterday. Wasn't much going on in the Bitcoin price yesterday. Obviously, Thanksgiving is here. Thursday, down 0.3. But in terms of the Fear and Greed Index, this is still looking relatively healthy because we know that this can remain at elevated a reading for a period of time, sort of 2 to 4 months. Sometimes you get a month and a correction and then it bounces straight back into it. So I dare say that this is potentially what's going on here. So I wouldn't fear any sort of significant correction in the sentiment to fear or even below fear into that extreme fear if it's able to get there. This early on, I would say, in the kind of parabolic phase when, Bitcoin's driving into new all-time high prices. The swings in the sentiment will get more extreme because you have more fresh blood here, and they are worried about the few bucks that they've thrown in the markets at the tops, like we saw with the ETF flows. They're throwing their money in at the tops rather than being here during August and September, buying Bitcoin at 50, 60Ks. They're throwing it in at 80 and 90Ks. As for the short-term price action for Bitcoin, support levels are still intact here. The highest one so far is at 93.5K. Only a couple of days closed before we got the bounce, but do note that the bounce was on lowering volume. Therefore, there's a higher chance that we come back to at least test 93 and potentially test in the zone between 89 and 93 again. You've also got the low there at $90,700. The 50% level still at 83K. So plenty of support to the downside. You just have to endure. If you've bought in a little late or you're a little bit emotional about your money, the worst case is somewhere around 13%, possibly down to 19-ish%. But that doesn't mean that it has to go there. We just have plenty of support levels to the downside before this particular move tests the upside again. Now, in terms of the longer term for Bitcoin, we're looking at the monthly chart here and what happens after the election. As we come into December, I'll have a monthly video coming up for that as well. So make sure you're subscribed to the channel for the December update. That's for Bitcoin, cryptos, and the stock markets. This gray vertical line is November. So what happens after that period? Well, in each of the cases, you can see a pretty significant move to the upside. Let's start with 2012 to that peak. You've got 12 months to the upside. Very significant correction that happened about 6 months later, and that lasted about 5 months before you had that final 2-month blow off top. And so if this lines up with something like 2025, where you have this big pump, if we're in the midst of this pump and the market goes dead for several months, don't go anywhere. I think I need to say that now before we get to that point, because what happens every single time at these points, people get disillusioned. They start listening to the bears and they start thinking that things are going to correct and it's all over, like they did through 2024. But then you might get this pump at the end. So just keep watching the swing charts. Stay tuned to whatever analysis that you watch. In particular, just keep watching the charts rather than sort of the bear porn if this particular scenario happens. 12 months to the upside from that November period is what we're looking at. 2016 into the peak was 13 months. And we take a look at last cycle from 2020 into the peak, that was 12 months. So if we're on par for something similar, I never say exacts because we don't know. There's no data here on the side yet, so we don't know. No one knows. We're going to look somewhere around that period of the second half of 2025. But as I pointed out, I don't think it's going to be an easy ride. Each of the previous cycles was not an easy ride. 2021, not an easy ride. There was a 50% correction in the middle of that. 56% correction. And you had to wait it out for roughly 3 months before things started to get moving. September was a terrible time for a lot, but it was a higher low, and then the market kept going. 2017, you had the correction at the top. You had 2 corrections in between. That was June, July, and then August peaked into September before we went into a final move. But within that, there were lots of very volatile days on their own. One in particular was in November. It shot up, shot down, and then closed in the middle. So those sort of things do wash a lot of people out, and it can be very, very short term. And then like we looked at with 2012, 2013, big moves up from $10, $12 up to $290, $260, and then there was like a 5-month correction before it boomed again to $1,200. So none of the final years of the bull markets have ever been that clear cut. It's never that easy where it just goes straight up. So this was the low pattern that we uncovered a couple of months ago, actually, looking at the lows, lower lows, higher lows forming. And then we got the overbalance in time and price right here, which showed us that the sentiment had flipped. You had more bulls in the game. Well, you had more buyers in the game, but the sentiment was still quite down. People thought that the market wasn't going to recover, and it was just another fake bounce like we'd seen for the last sort of 5 months at that time. But this told us that we're getting an overbalance here, an overbalance in buyers to sellers. And then, of course, we had the higher low form again, and then another big boom after the election. So I'm measuring the low to where we are now that's roughly about 16 weeks. And where you were back here at that low to 16 weeks was basically a week before the top. So around that sort of similar period where you could expect a pause. And that's, I guess, what's happened this week. We're in a pause. Now, I do like to keep note of a couple of these areas just in case you've got a similar roadmap to the previous one. And in this case, the August low. On some charts, on some exchanges, the August low was slightly lower than the September low of 2023. So if I'm measuring there to roughly 16 weeks, 17 weeks, we're in a very similar pattern right now. You see the green and then the red, and then basically it was a sideways period for about 8 or so weeks before you got this next boom to the upside. So I'm taking both into consideration, but both have a pause. One went a little higher, came back in. One had a lot longer in terms of time, and then a move up. So with either of them, still a good sign. Pause is okay. And then there was further upside from that point. Just had to be patient while the market decided what it wanted to do next. Like we'd shown in previous videos, markets basically move 10-ish% of the time, and 80 to 90% of the time, they're figuring out what they want to do next. And we've basically done those few big weeks up, and the rest of the time it's deciding what it wants to do. Next up are the altcoins. True altcoin market cap, ETH, Solana, and a few of the AI coins. Make sure you hit that like button if you do find value from the content. And of course, if you are new and you've made it this far, let me know in the comments section, and of course, subscribe to the channel. Total 3 market cap, the true altcoin market cap, as we have now removed the stable coins using the TIA crypto total market cap. You can see that we are still above each of the tipping points, 650 billion, and the lower level here that I had around 480 billion. So we've taken off from there. I'd say we're approximately here. You can see the market is going on a bit of a pause, and then the next couple of moves happen. There are plenty of corrections in between, but not to get too far ahead of ourselves. The main thing that is still part of the analysis is we've got further upside to go, and things are rhyming. There's a bit of a pause after the breakouts of the tipping points. Here's your tipping point, and there's a pause. This tipping point here basically ran straight up and then had a pause around the previous old all-time high. So we're not exactly at the old all-time high, but we're pretty much, well, it's pretty much the only other resistance level overhead from this point now. Upside to go, pauses are okay, and probably not a bad place to get into the market, as I'll show you with some of the AI coins that have pumped. ETH is holding out here, 2 more days to go. Remember, the close that we're looking for is above $3,600. The other 9 signals I went through in yesterday's video, I'll leave a link to that at the end of today's video so that you can follow along and see how well it's doing. One thing I didn't include was the volume. The volume that ETH has gone through this month. I'm on Bitstamp, but it shows up on the other exchanges as well. The volume exceeds anything going all the way back to March of 23, which in itself was a signal, because that was the banking crisis. The crisis that led to far higher prices across all assets. Okay, so crypto, Bitcoin, stock markets, and real estate. We've seen higher prices since then. So some crisis that was when we saw much, much higher prices. Huge volume. And we're looking to snag our 10th signal here, 10th macro signal in amongst many other signals to show the strength. ETH BTC also holding the line here, 2 days to go, and the price to remain above is 0.036. So not much to add since yesterday, apart from a small day down after it's gone on a pretty good run to the upside, lots of good volume. And this is one of those signs that we're looking at, one of those signals we're watching for, I guess, the start of a like a more retail altcoin season. But we've already seen prices go up, as I've showed you earlier in the video. A lot of the season has started, but it's more so when people get really excited about their gains. Solana also is taking a pause here. Not much has changed since yesterday, so I'll review this on videos next week. But basically, it's still holding out, potentially putting in a short-term lower top. So something to be aware of. You've got lower lows formed here, and should this day come down, well, you've got lower highs as well. I'd be looking towards any of the previous support levels at around 210, and you've also got that low there around 220. So they're the first ones to keep watching for Solana, if that's something you want to be buying up before the next move to the upside. Now, what we have seen are a few AI pumps. So we got Render and FET. It's broken out of the 50% level, the first 50% level, I should say, and those previous tops at around $7.60. So render is setting up into a stronger position than what it has been for the last several months. The next level to get above is the major 50% of the bear market, which is at $8.53. And would you know it? Yesterday's close was $8.54. So it closed above that level by 1 cent. That's how important these 50% levels are and how deadly accurate they can be sometimes. So we're looking for multiple closes above that level. 3 days in particular would at least start to confirm some strength above the resistance level, which could then potentially turn into some more strength to the upside. So things looking good there for render and for fetch as well. Fetch AI, so FET, it's come up towards the 50% level. You can see yesterday we got there and failed so far, but at least it's above those tops and above the extension 50% level. So things are looking relatively okay here if fetch is able to get above $1.80. That's the key level there for continued strength to the upside. The cycle is doomed to repeat. Biggest pump in history. So reflecting on what I said earlier around the biggest pump in history, the obvious stuff, the most money is coming in. The not so, well, let's keep on with the obvious stuff. Most money coming in, biggest gains that we are seeing in recent time. And of course, when you get to some sort of crash or collapse or correction, whatever it happens to be, it is going to be the biggest crash of all time as well. It's just a logical point to be at. When you've got the most money coming in, maybe you would probably see the most money coming out. Therefore, the headlines can be the biggest crash. And of course, when you get the biggest fearful headlines like that, it fears more people out of the money. Well, if it's the biggest one, can it get any bigger? Just like we saw in March of 2023. I know I'm recalling that again. It was somewhere around here, but it was the biggest bank collapses of the time, even though the bank was maybe the 8th largest in the US. I think it was even less than that, but it was the largest because it had the most money of the time. I think it was around 200 billion, but that's really nothing in comparison to the top 8 banks in the US. And I dare say, I think the Silicon Valley Bank, maybe it wasn't even in the top 10, but I digress. We are here to look at the cycle is doomed. And how do we get to this point? So this is now down to my opinion of how this works and basically my study of the 18-year cycle. This is what I'm seeing. I don't care who you vote for, but we're going to see more and more of this. The truth, the freedom, the justice, they're here to save us. It's essentially the same mindset around how this happens every single time. This time is different. And this struck me, especially when Musk retweets it. So basically, I don't know if anyone wants to disagree with me or have a constructive conversation about it, but I'd say Musk is one of the biggest influential voices of our current time. If anyone wants to disagree with me on that or have a constructive conversation, let me know in the comment section. But I'd definitely say Musk is probably the largest there. And so he's retweeting this. I suspect he thinks and feels this as well. He's already got the bottom of the market wrong, 2022, calling for a recession, and the market's obviously been up a lot from that. I've shown that on the channel. I've shown the receipts of Musk talking about a major recession. Again, nothing against it. I hope that things go even better. Okay, I'm not trying to call for any sort of down of the US. I think things are actually going to be fine, but there's going to be some pretty decent upside and some pretty poor times after that because people tend to forget. And this is a huge one here. The entire country, USA, feels like it's being powered back up. Do you feel it? And so you're starting to get it feels different this time. Therefore, things are going to be different this time. I'm sure most of you guys know who Andrew Huberman is, 1.4 million here. And he's saying sleeves are getting rolled up. That's for sure. So, we're all getting back into it. We're all trying to fix this country that Biden screwed up in 3 years. That's essentially the feeling that is going on. We're all going to make things better. If you have read through the books and read through the history of the 18-year cycle, going back over 300 years for the UK, 200 as I've talked about many times on the channel, this happens every single time. There is something that is told to us that is different at these peaks. I bring this up and make a very strong point of it now before it's too late. Like there's no point in talking about it after the fact unless you want to study it for the next cycle and wait your next 15 years to get to the next peak after you've come down and then you're sort of going back up and the next peak is somewhere 18 years after this, somewhere in the 2040s, right? But this time we are working through where this time is different. So I've reposted this as well. You're starting to see it creep up more. At least I'm starting to see it. Follow me on X. The link to this is down below here. See Twitter, X. And then I'll keep posting about this as I see things come up. And I'm happy if you guys want to tag us and stuff that you see on X as well, how we might be hearing about this time is different. I'm not saying that we're going to see any sort of major collapse this year or next year, but I am saying that we're getting ready for how this time is going to be different. It's the winner's curse phase, 18-year cycle coming to a peak. 2 years ago, I did not know how this would end up. I still don't know how it's going to end up, but the picture is becoming a lot more clear the more I see posts from, say, Elon Musk, and more importantly, how people respond to these posts as well. This is where I get the big information, well, for myself anyway. This is where I get the big stuff from. You got a lot here, all due respect. You've been talking about 18-year cycle for 2 years. Shouldn't we call it 20 years? Now, as much as I try and prepare myself, prepare anyone that wants to listen to the next couple of years and, hopefully making the most of the upside in preparation of any sort of downside, sometimes it falls on deaf ears, like, comments like this, or maybe I'm just not getting the message out clear enough. But thankfully, I think it's the minority that aren't hearing the message. And the majority of you, at least in the case of the other couple of comments here, are really understanding where we are going, I guess, within the cycle. At the end of the day, I could be completely wrong on this, but it's the best thing that I have found to help me along with a roadmap to help with investments and trades throughout the years leading into any sort of peak, and putting aside the noise of the bearish doomsday crap that we have heard for the last 12, 13 years, and even do so into 2024. I think that's going to go more and more quiet as we lead up to the peak, and then it'll come rushing back as we roll over into any sort of correction. So not to leave it on a doom note here, plenty more upside to go. Subscribe to the channel. I'll be back with you in another video. Don't forget, Black Friday is here, and this is the last weekend of it. I'll see you here next week. Until then, take care and peace out.